G'day everyone, Tony, Tim and Brett joining you today. Now, the elections just occurred, Brett. Markets are a fuss. Did the elections really change anything as far as markets are concerned?
If anything, Tony, I think the past has shown that an election, once it's over, the markets usually settle down after a few weeks and they recover.
Yeah.
A lot of the volatility was there in the lead up to the election, and it wasn't really from politics in Australia. There's a lot of things at play at the moment that are coming from overseas. Government, which whether it's a Labor or a Liberal, I don't think they can have too much of an impact on what the markets are going to do.
Absolutely, and the numbers actually bear that out as well. It doesn't really matter which brand is in power. Markets end up in roughly the same place over time.
Yep.
Tim, the election, did it change anything?
Not much, no. It's going to be pretty steady she goes. Not a lot of policy changes actually between the two major parties, assuming the Labor gets in with the enough seats, which it looks like they will.
Yep.
So not a lot of changes there. So I think there'll be other factors that are probably going to be more important for our clients.
Yeah, definitely. What sort of things are you thinking about just the balance of this calendar year? What's it look like for you? Because there's a few things coming up, superannuation and other areas.
Yeah, there is. So on the strategy side of things, there's the potential for these recontributions for folks that couldn't put money into super up to say age 75, without meeting the work test. That's a great one. It's a great one for many factors: getting money into zero tax environment, potentially reducing estate taxes, which is a big one. Bit of a sleeper as our clients are aging. So that's a big one on the strategy side. And then on the investment side, I'm a great believer of watching interest rates, because the price of money dictates so many things. Maybe the less, mergers and acquisitions as interest rates go up. I've been watching the bond yields really closely, and they've probably jumped a fair bit over the last 6 months because of inflation worries. But they're actually starting to top out a bit now, I noticed. So that'll be the next thing we've got to keep an eye on anyway over this next 6 months. But the inflation story's there, but it may not be as bad as people are saying in terms of the longer term.
Yeah.
Professional market's saying that anyway. We'll just see if that's true or not, but diversify, always diversify.
Definitely. And Brett, for you and the team and all of us, the next sort of 6 months or so, really, we're only 6 months away from Christmas season, believe it or not. The year's a bit of a blur. It's almost the end of financial year. What's on the agenda for everyone?
Look, it's always a busy time of year with client reviews. Those that are still working and making sure that they're making use of their contribution limits with superannuation.
Yeah.
People that are transitioning to retirement are taking a part pension and still working part-time. And I suppose it's just a natural progression of people. They're thinking about tax and those types of things. So they're starting to try and just sort out their house and make sure that it's in order, ready for 30 June. So it's normally a busy time. Like Tim, I'm really looking forward to being able to contact those and speak with people about the recontribution.
Yeah.
Come 1st of July for those that are under 75. There's lots of interesting things going forward in terms of downsizer and those types of things. There were some slight tweaks that were really interesting as well. I've had a few people, not many actually, but a few ring up and say, look, what do the markets mean for us? And I haven't changed my superannuation and that type of stuff. And we can't time the market. We're not traders. We're investors. And by all accounts, and we've spoken about this type of stuff too, that we don't think that they're overvalued at all. Whether that means the volatility is going to dry up anytime soon, I think we'll get some clarity over the next 3 or 4 months, and in the lead up to Christmas, we'll know where we're going.
Definitely, yeah, absolutely. And on the market side of things, and Tim, you summed it up really nicely. The major force in markets is always interest rates. It's the way so many things are telegraphed and so many things are priced. So we're going to get rate hikes in June, July and August. We have to see that come through. We also have to see where inflation lands, or if it starts to come down incrementally over that period of time. But in the background, record low unemployment rates in Australia and many parts of the world. You don't get that on the cusp of a recession. That's really important to note. And that's why that sort of talk is really out of order at the moment. We still have very low interest rates, even if they start to go up. And corporate earnings are really, really robust and growing at the moment. The other thing is too, that just on the inflation front, a really healthy economy with very high levels of demand at the moment that well exceeds what's available in terms of supply. It's a really arcane way of saying that the inflation pressures are actually a result of good things. So in summary, setting ourselves up for a much better end to the year, albeit that interest rate environment change, that is really the big driving factor at the moment in markets.
And we can't control any of that. Our job is to enjoy life. We get one of it, and just don't worry about the things that are out of your control.
Definitely. Brett, Tim, as always, good to catch up. Thanks for your time. We'll catch you soon.